something that's been almost unimaginable in the past. So it really is a new era for blockchain as a result of this network launching.
Thank you. If I could just, if we could just break this down even further, though, so this is, as you know, there's a lot of new people who are entering the crypto and blockchain industry, right? So these are all kind of like high-minded, really cool ideas, but like from the user-consumer perspective, like if they're going to use this, what are they getting out of it? What are the benefits for the average user? Like why would they choose to use this as opposed to the internet that they all already are used to?
Well, that's a great question. I think the answer plainly is that, I mean, there are two different answers. One is just the sort of more sort of political one, which is that with smart contracts, you can build autonomous internet services. We call them open internet services. They run a bit more like open source projects, and they're controlled by governance tokens, and they're transparent. So it's very different to if you build, there's a project called District that's building a tokenized social network, and that will run transparently. Whereas, of course, a social network like Facebook doesn't run transparently. But actually, the big advantage of these systems is that they're going to provide much richer user experiences because smart contracts are composable. Any smart contract can plug into any other smart contract. And blockchain provides a means, unbounded blockchain, which is what this is, provides a means for lots of different teams of developers to riff off each other while they're building out an internet service, much in the manner of an open source project, drives innovation faster, makes a richer experience for users. In addition to that, you can introduce tokenization. So, a social network like Facebook makes the user the product. They have them on a hamster wheel, feeding them content they like, and they say to
Oh, we lost Dominic, but super fascinating concept.
Oh,
We're just in the middle of it. Oh, wait, did we get him back? There we are. Dominic.
There's some kind of thing, it drops off. Yeah, so look, I mean, Facebook, if you're the user, you're the product. In the future, tokenized social media, the user is going to be.
All right. Well, thank you very much, Dominic, for joining us. We'll try to pick up with him perhaps, but you'll want to hear more from Dominic during his keynote address at Consensus by CoinDesk at 1:30 p.m. Eastern today. That was Dfinity founder and chief scientist Dominic Williams. And don't forget to register at events.coindesk.com if you want to hear more. Coming up, crypto markets update with FTX and Alameda Research CEO Sam Bankman-Fried. For a live look on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at 37,900. Bitcoin is peaking up about 16 basis points over the past 24 hours, and the CoinDesk Ether price ETX index is right now at 2602. ETH is also riding on a high at 4.5% over the past 24 hours. And our next guest is an MIT grad, former Wall Street trader, and founder of Alameda Research and Project Serum. Sam Bankman-Fried, CEO of crypto derivatives exchange FTX, joins us now. Welcome to the show, Sam.
Thanks for having me.
Great to have you as always. So I'd love to hear your perspective on what to make of the crypto markets right now. We saw this huge sell-off last week, a bit of a bounce at the start of this week, and now just some inactivity. What is your outlook for the near term?
Yeah, I think a lot of this has to do with liquidations. There was some negative news coming out of China, and I think that sort of drove some initial downwards price movement, but that then triggered sort of a cascade of liquidations. On the sell side, probably about $20 billion all told, which really caused a further crash in markets. And so I think that was a key piece of this. It seems like the liquidations are mostly over for now. There just isn't a lot left to get liquidated, frankly, at these levels. And so I think that sort of led to a little bit more stability and a little bit of a recovery. Looking forward, I think what we're going to have to see is, which of sort of two factors is stronger. One of them being, institutions or people looking to buy in at what seems like a more attractive price, or another being institutions starting to back off because of worries about the volatility.
Mm-hmm. We just heard from Bobby Lee at Consensus by CoinDesk, Sam, and he talks a bit about China, and China has had an impact, it appears, that on the market. So let's just have a listen to what he has to say. Okay, actually, we do not have it. But in any event, Sam, could you comment on China's recent ban or limitations or threats against mining, and how that has been having an impact on the crypto markets?
Yeah, I mean, I think a piece of this is the mining. I think a piece of it is worries about a greater China crackdown, and I think a crackdown on exchanges is another piece of this, which has been rumored and looks like is at least somewhat playing out. So, I do think that's been pretty impactful, and I think that, query again how much this is something new versus the realization of something that's always been there versus more smoke than fire. But one way or another, it definitely spooked markets, and I think that, like most jurisdictions, China is still trying to figure out what its long-term, regulatory plan is going to be in crypto, and it has sort of a long history of sort of alternating crackdowns and loosenings up on crypto. So I think it's still hard to project what the long-term impact of this is going to be, but I definitely think it's one step towards tighter regulation, possibly greater nationalization, and definitely a lot more scrutiny placed on a bunch of different areas of crypto in China.
Hey, Sam.
Sam, you are actually, in the Asian market, as far as I know, FTX is actually quite liked and used by Chinese users. So this is, would impact your business directly. I think you're right. There is some element of more smoke than fire, but just looking at what China has actually said, or these notices that have come out, what is actually new here? What is significant here? Because I think there's a difference between what's actually happening and how people are interpreting it.
Yeah. So, I mean, who knows is one answer here, but what's going to happen. But I think as far as we can tell, there's sort of two primary impacts of this short term. One of them is on mining farms, and it does seem like some Bitcoin mining is going to be moving out of China and to other jurisdictions. And, I mean, query how much impact that really, query why that is that negative for crypto. Although, you can imagine it causing sort of short-term selling from people, miners that have Bitcoins in China. But another and pretty impactful piece of this, frankly, which has been rumored is, some Chinese-based exchanges starting to restrict access to some services to Chinese users. And, it's a big demographic, it's a big jurisdiction, and there's a lot of big Chinese, exchanges here. And so that is something which could have pretty big impact, I think, on at least some parts of the space, both in terms of there just being fewer options for a lot of users, but also in terms of reshuffling where people are trading.
So this is, as we know, the Chinese crypto community is super resilient, right? Like, China cracked down pretty hard in 2017, and everyone was like, okay, is this game over for crypto? And then kind of the opposite happened, right? Then there was a massive bull run. So the question is like, worst case scenario, right? China cuts off OTC, it just makes it really hard to trade. Will it actually matter, or will the Chinese crypto community, just as they always have done, just kind of find a way around it, and then the global market will just continue as before?
It'll matter to some extent. It won't be, make or break for the industry, but it's going to mean fewer inflows from new users who don't yet have, ways to access crypto, and who are relying on those, C2C channels to get their funds into the crypto space in the first place. And I do think you'll see some slowdown of activity from existing users. I don't think it's going to be a sea change for the industry, but, on the margin, I think if there was a real prolonged crackdown here, again, I don't think it'd be the biggest thing in the world, but I do think it would have some impact on the industry.
Sam, you mentioned some of the liquidations that happened earlier this week. Do we know anything about who was liquidated and who was doing some of the selling, and also who was doing some of the buying on the rebound?
Yeah, a lot of people were liquidated. I think is a basic answer.
Well, obviously.
But in particular, I think that when you look at these, my sense, and I don't know for sure, this is just my guess, but my guess here, and it's worth noting that FTX generally doesn't have the bulk of the liquidations. We definitely had some. We did not have the biggest. It's sort of not the target trading style and demographic of FTX users to some extent. But my sense is that this is a lot of people. This isn't sort of like one big player getting liquidated. This is 10,000 players, with $100,000 of positions each on average getting liquidated, and that the biggest players are $25 million, $50 million positions getting liquidated. A few bigger than that, but that is not like one player being half the total size here. And in general, there's just been like a ton of leverage in crypto, and in particular upside leverage. It's not been symmetric, and this has been true for a while. You can see it if you look at futures premiums. You can see if you've looked at borrow rates of dollars in crypto, or if you just like read literally any tweet about crypto from January through March of 2021. And so there are a lot of people who are leveraged long. And,
you suspect it's mostly retail?
Well, yes, but retail in crypto is a little bit more diverse of a segment than retail is in traditional finance. When you think of retail traders, you think of people with $1,000, right, or $10,000 maybe, who are trading thousands to hundreds of thousands of dollars a day. In crypto, you have a lot of players who have $20 million, just like some random 23-year-old, in Singapore is $23 million, and invest in the Ethereum ICO. Maybe 3 people working together in Australia, or or 2 friends in Thailand, or whatever, and trading $100 million a day and putting on $50 million positions. So it is, I think, mostly individuals as opposed to institutions. But some of these individuals are large in terms of their footprint in crypto.
And are you seeing them do that leverage buy on the way back?
Some of them definitely are. And I think people were a little bit cowed by what happened, and I think that there's less of that than historically. So I don't want to make too strong of a statement here. But I think that there is a fair bit of it. And I think one of the most ridiculous things is you'll see kind of Bitcoin recover from like 31K to 32K, and some people get liquidated on the way up there, which means some people just put on 100x leverage short at 31K immediately. So there's people putting on every position constantly. But I think leverage is still lower now than it was prior to the crash by a decent amount, and open interest is still down on derivatives quite a bit from what it was pre-crash.
For you, it's he talks about China's secret. Have a listen.
Okay, so the secret is, in terms of banning Bitcoin, China actually has to keep banning Bitcoin until capital controls are fully lifted. So that's a secret, because China, the economic society, has capital controls. So as long as capital controls are involved, Bitcoin being a free internet sort of money that's freely moving, it's going to be constantly at odds with the capital controlled society like China. And you see this in Korea as well. You see this in Vietnam and other countries. So that's why countries that are under capital controls have a very hard time having a legitimate sort of crypto exchange market.
That was the former founder and CEO of China-based crypto exchange BTC. He's now the CEO of Ballet. But wanted you to weigh in on that, Sam. What do you think about this so-called secret that China has to ban crypto, but until the capital controls are figured out?
Well, I don't know if it's that much of a secret, but I certainly think there's some truth to it. And as you said, you do see this in all of the countries that have restricted currencies. That they've made a big point over the last 60 years of trying to have national control over their fiat currency, and that basically means a ban on freely selling it for other currencies, and that you can only do so in sort of specific whitelisted cases that are clearly economic as opposed to trading related. So, you can use your currency to buy foreign goods, and sometimes that involves selling it for another currency. But that's a different thing from speculative investing. And this has been true of China for a while. And yep, that plays a big role here, that they're trying to maintain oversight and control of RMB. And anything that makes that more difficult is going to face a headwind there. And I do think that's one thing you see with crypto is worries from Beijing that Bitcoin is going to make it harder for them to track the monetary supply within China, going to make it harder for them to stop selling of RMB. It's going to introduce lots of unclear cases where someone's trying to buy crypto, with RMB, and the government's trying to figure out, what is this? Is this an economic or commodity like investment, or is this someone trying to short RMB? And sometimes the line is pretty thin there. And I think that's one of the things that they're worried about here, as well as people using it as sort of a backdoor way to offshore RMB. And I don't think that's the only concern in China about crypto, but I think it's always been one of the biggest, and is probably going to remain one for the foreseeable future.
Do you think one of those concerns is the idea that perhaps Bitcoin might take the place of the RMB in terms of as a kind of a quasi trade currency, if you will?
Yeah, I mean, I don't think it's going to quite occupy the same niche that RMB does, but I do think that's absolutely the worry, is that it could, sort of in the limit where people just sold all their RMB for BTC. I think that is not what the Chinese government wants. And I think that, they want, ideally, RMB to play a significant role on the global stage, and, are worried about it from that perspective as well. I think it's less, though, about direct replacement and more about facilitating outflows of RMB.
Sam, quickly, what do you think about this North American mining meeting? Is this against the spirit of decentralization in crypto?
I mean, it's like where you open sort of like this interesting can of worms, where what if you have a completely open network and the big open players on this open network openly and without any coercion decide to collaborate with each other? Is that decentralization, right? And I mean, it's a little bit of a definitional issue. I think that, first of all, the most important thing by far is that it remains open, that anyone can mine. And as long as that's true, it gives you some sort of some guarantees here that if they tried to do some sort of OPEC-like thing, it won't work, because anyone can come in and mine Bitcoin, right? And so if they're like, oh, we're just all gonna lower hash rates, then whatever, you'll just start mining, if it's economically efficient. So I do think that there's a substantial protection against some of the worries there, which helps a lot. But I would say that that it is a little bit of a weird occurrence. I think it's a healthy occurrence in some ways, because I think that there was a lot of stupid dialogue going on about ESG, and stupid not in the sense that ESG is stupid, but that the dialogue was, and that the dialogue was centered around name calling, and centered around one side saying Bitcoin was trashing the planet, and the other side saying, lol, these fucking noobs complaining about Bitcoin, they're gonna get wrecked, roughly speaking. And I think neither of those were sort of the healthy response, which I think was something more like, all right, let's do the math. Let's figure out if this is a significant concern. And if so, let's figure out how we can address it. And I think the answer is right now, it's not a huge concern, but if crypto gets huge, I think you could imagine it being one. But I think there are ways to address it. I think, especially with Ethereum eventually moving to proof of stake, most of the major cryptocurrencies outside of Bitcoin will be substantially less energy intensive. And so I think that's one piece of it. But then I think even within proof of work, it's not prohibitively expensive to buy carbon offsets. And that's something we've been looking into and that we've pledged to start doing now to offset, the energy usage that FTX has. And then I think the other thing here is that, you can move to clean energy, which is a lot of what I think that sort of meeting was about, between the North American miners. And I think all of those are healthy responses to it. So, I think really what I'd say here is as long as it remains an open network that anyone can compete with, I think that sort of really makes the worries here a lot less big, which is nice.
Sam, you're doing big things. Always a pleasure having you on the show. Thank you for sharing your insights and perspective from the Asian markets.
Thanks for having me.
All right, that was FTX CEO Sam Bankman-Fried in Hong Kong. Coming up, Crypto.com's NFT platform is ready to take off with some legendary artists. That's next.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Snoop Dogg, Lionel Richie, and Aston Martin have all partnered up with Crypto.com to launch NFTs. Crypto.com is sponsoring Consensus by CoinDesk, where we've had some great discussions with key players in the space. Joining us now is Joy Conyers, EVP and Global Head of NFTs of Crypto.com, to unpack what the future looks like for non-fungible tokens. Welcome to the show, Joe.
Thanks for having me.
So, Joe, would love to hear about this new NFT launch that you have going on at Crypto.com. How is it different from what's already out there?
Yeah, we're creating a really curated marketplace. We've already done about 50 drops, ranging from the people you mentioned, like Lionel Richie and Snoop Dogg, to the International Ice Hockey Federation, which we've dropped today. We've got folks like the Italian football league, Serie A, who just did one this weekend, which we're really excited about, and have been doing some very small drops, but also some multi-million-dollar drops. And really trying to understand what the best thing for our collectors is going to be long-term, and building out what we think is a really exciting set of NFTs for people to buy.
And earlier today at Consensus, Keith Grossman, the president of Time Magazine, appeared for a special NFT All-Stars episode this morning that also featured Noah Davis from Christie's and two of the most prominent collectors of NFTs, Metacoben and Whale Shark. Take a listen to what he said about the role of NFTs.
If you think about the early computer era, right? Like it was everyone talking about specs. I have a 486, I have a Pentium, I have 8 megabytes of RAM, I have 256 megabyte hard drive. It wasn't until Steve Jobs came around and said, let me just show you what I can do with this. And let me show you the experience, and moved to brand, that all of a sudden it sort of took off on a major level. I agree. Like once the term disappears and it becomes normalized, that's when you know it's been fully adopted.
When do you think we'll reach that moment? Non-fungible tokens, it's a bit of a mouthful. Not everyone is very clear on what that means, but when is that mass adoption and critical moment that will happen when everyone kind of gets it and it's used like social media is used today?
That speaks to me in a lot of ways. We've recently brought on an editor to start contextualizing how we think about these art pieces, right? It's not about that fact that it is an NFT. It's the fact that it's an interesting piece of art, and getting it in front of collectors that care about the art more first than rather it be an NFT second. And that's what we're trying to tell the story for all of our creators. It's, explaining why these are interesting, what makes it a new piece of art, what makes it have a provenance that makes it special. And so we think that's a key part to our success and a key part for our creators' success as well.
Hi, Joe. Are we focusing on the wrong thing that NFTs can do? Right now, it seems to be a lot of the focus seems to be around art and collectibles, but are we neglecting its applications and ownership rights? And do you think that by not doing it now and not taking building out that market, we might be losing an opportunity there?
I think it'll take a little bit longer for those markets to mature. I spent about a decade in the music industry, thought a lot about this, how to, monetize IP on the blockchain. It's a really complicated legal problem. It's a jurisdictional problem, and it has a lot of repercussions long term. I think there's going to be more.
Okay, we just lost Joe as well, but nevertheless, thank you, Joe, for joining us. That was Joe Conyers, EVP and Global Head of NFTs at Crypto.com. We're going to take a quick break, and when we come back, Coinbase introduces their new Prime offering.
Finance is changing communities, from fueling local economies to connecting global markets. The future of money is taking shape now.
Crypto State by CoinDesk will bridge communities of crypto investors, thought leaders, and developers from around the world.
Together, we will tell the global story of decentralized finance. Join us for this virtual event series as we make stops in Nigeria, the Middle East, and Southeast Asia to dive into the movements that are disrupting markets around the world. Network, learn, and get insights from the builders, thinkers, and doers of tomorrow. Register today.
All right, Joe, we're actually back with Joe Conyers. He's back with us, EVP and Global Head of NFTs at Crypto.com. Welcome back, Joe. Sorry, we lost you there. But
so, Joe, we were discussing before the role of NFTs and potentially representing, let's say, ownership rights, not just in art, but in other things. And you were talking about in the music industry, an industry close to my heart, but also maybe perhaps in real estate and things like that. Are we missing the boat here by not exploring that now and instead focusing on the art industry?
I believe that there are going to be lots of different ways that people interact with NFTs. I think the mainstream will come in through art and through collectibles. But as more transactions become more transparent through creating them on a decentralized ledger on the blockchain, I think we'll see more and more bigger companies that have big vested interests moving into this space.
Joe, quickly, what do you think is the biggest barrier to entry for this, like the newcomer to NFTs, for the average user just trying to make an NFT?
If you ask someone in New York City what an NFT is, they'll point you in the direction of the subway. It is still that 2 or 3% of people really understand what this is, what it could be. And so I think a lot of people see it and they say, and then the next time, maybe if they see it earn some money, they might get their credit card ready and they say, maybe I should do this. And the third or fourth time, when they feel like there's that real FOMO, the fear of missing out hits them, that's when they come in. So I think it's going to take a lot longer for even the crypto curious people. They have to find something that they have a real affinity with, and then they have to see that this is an interesting collectible item, or they have to just have if it has a physical utility, I think that gets people over the hump more quickly. But as people get their first NFT, they'll get the bug and they start to buy more and more, especially as they see that this is the way that creators want to interact with their fans.
Okay. Joe, thanks so much for coming onto the show. Looking forward to seeing those next NFT drops.
Excited to be here. Thanks for having me.
All right. That was Joe Conyers at Crypto.com. Well, Coinbase reported institutional trading volume of almost $60 billion in the fourth quarter of 2020, representing roughly 2/3 of total trades on North America's largest crypto exchange. Joining us now to discuss is Coinbase Head of Institutional Sales, Brett Tejpal. Welcome, Brett.
Hi.
Good to see you. All right, Brett, amid this Bitcoin volatility we're seeing in the crypto markets at large, what activity are you seeing from institutional clients? Are they buying the dip, or are they concerned about the volatility?
We've seen quite a lot of trading flow, as you might imagine. Over the course of the past year, you've seen our numbers explode in terms of volumes traded and assets on platform. And with these bouts of volatility, they present awesome trading opportunities. So we're seeing a huge volume of trading go through, but I can sort of point to one thing. There's no sort of panic selling. There's just consistent active trading from institutions.
So, Brett, what's the difference here between your Prime services that you're launching and Coinbase Pro?
Right. So Pro, you can really think of direct access to the exchange. So it's a good and it's an awesome app for active day traders. When you begin to scale up on the institutional side and you think about clients that have dedicated, hundreds of millions and are really looking to get great execution, they need more and more special features and functions. And so today's announcement is really a pivotal time for us in terms of doubling down our commitment to serving the large and growing institutional marketplace. So today, really what we've done is we've tied together our best-in-class custody, our advanced trading, data and analytics, and prime services all in one place. So previous to this moment, we had a few hundred clients that had the ability to engage in lots of this activity, but it wasn't seamless and it wasn't in one place. As you know, we've made a couple acquisitions through time, Zappo, Skew, Bison Trails, and others. And what we're doing is we're consolidating that whole client experience in one place. And so it's really important to sort of differentiate and understand what the offering on Prime is. There's been much discussion about it. And this is, to my knowledge, I think, to the best of my knowledge, the first fulsome solution for Prime. And so, go ahead.
Oh, no. So what are the criteria to get in? And like, are there extra fees, more liquidity? What's the trade-off here? And like, who can get in?
So anyone that's deemed to be an institutional client over time will be invited to join the platform. So that's the good news. I think that the institutional clients that have the biggest and most active trading activity will probably get the most out of it, but it is indeed going to be open to all institutional clients. And so if I talk a little bit about the specific features and functions, as you know, we've had smart order routing. So that's really important, along with algo execution. So that ensures that any client can get the best possible price when they're entering into the marketplace. We also have the integrated custodial solution. So now, as a large institution that may have 50, 100, a billion, multiple billion of assets in custody, they have their separate custodial account. And so we're beginning to tie together. You can buy and sell at the best price. You have an integrated offering on custody, and then we begin to layer on other services like pre-trade and post-trade analytics. Right? We just recently made the acquisition of Skew. It's amazing. You'll now have a whole suite of analytics to guide your trading activities. We also bought Bison Trails, and so now you'll have the ability to do over time delegated staking activity. Also, when you talk about Prime, you need to make a reference to financing, and so for the most, catering to the largest and most active traders, if you have clients that have hundreds of millions, if not billions, or even smaller positions in the platform, and you want the ability to instantaneously trade, how do you do that? And so the answer is that Coinbase puts their own balance sheet and working capital to work for the benefit of clients, and so that's really important. So embedded in this offering, I just want to call out 4 specific things. It gets into the granulars of how trading is done, but it's really important. So embedded in our offering is intermediation. So what that means is we actually have our capital and coins sitting on 12 different venues. And so, as you know, in crypto, you need to fully fund your trade before you can participate. And it's actually Coinbase's working capital that's sitting on those exchanges. To the extent that something were to happen, an exchange hack, an event of loss, etc., actually Coinbase shields its institutional clients from those events. So that's like true intermediation. The second thing is you can effectively outsource your treasury management. So what does that mean? Institutional clients that are sophisticated have the ability to actually create their own pipes and plumbing and connect directly to all the 12 different venues. But in doing so, you actually take on all this operational risk. And in doing so, you would be required to conduct your own treasury management. So with our service as the one-stop shop, you can come in and have access to all 12 venues, and we actually manage the treasury function for you. So intermediation, treasury management, and then of course, when you're in the hot wallet, when you're in Prime, in your trading account, you effectively have custodial services.
Sorry to interrupt you, just because we're really running out of time. I just want to ask one sort of bigger picture question. One of the questions that we've been getting a lot is just how what's been happening in the markets over the past week affects this larger narrative of institutional involvement in crypto, right? Because institutions are largely seen as driving the most recent bull market, but this week we've seen all this kind of warnings from China and spooking the market. Do you think any of this matters for the long-term institutional involvement in the crypto markets?
The short answer is not so much. So if I take a cue from what I'm seeing from clients, we're seeing consistent trading activity. we're seeing the steady pace of institutions onboarding. Even with this bout of volatility, I haven't seen any one of those institutions sort of tap the brakes a little bit. I do think that the narrative around energy needs to be answered. But no, I think that the institutions that I'm speaking to are certainly in this for the long haul. And
is
they're
that
taking
a question that comes up
approach.
with institutions, this idea of clean Bitcoin, and if they're custodying crypto, is that something that they want and they would pay a premium for?
Yes and no. I would say it's only a small minority of clients where it's come up as a topic. So not so much. But I did notice that there have been some new products that are on their way to the marketplace. I saw One River's announcement yesterday about their energy efficient, clean Bitcoin fund, which I think is pretty interesting. So I do think we'll see more product innovation there, but it's not really been a driving focus of the institutions I'm speaking to.
Well, Brett, thank you very much for joining us this morning. Appreciate the insights and looking forward to seeing this new product you have launched.
Thanks for having me. Very exciting. Thank you.
All right, that was Brett Tejpal, Coinbase Head of Institutional Sales, Trading, Custody, and Prime Services. And that's it for all about Bitcoin, or rather, First Mover. It's early. A reminder that First Mover will have 2 editions tomorrow. At 7:30 a.m., Space Chain CEO Z Zhang will be here, and at 11 a.m., we hear all about from Binance CEO Brian Brooks, Marta Belcher of Filecoin, and Binance US CEO Brian Brooks, clarify that, Marta Belcher of Filecoin, and Carlos Domingo of Securitize. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewitton, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. Coming up at 3 p.m. is a special edition of Money Reimagined, the ESG edition. And later, the Hash team breaks down today's news developments at 7 p.m. You're watching CoinDesk TV.